Jesse, everyone, this is Dr. Joe Wall. He's going to be the MC today and lead us through these 4 presentations. So thanks for all being here. All right.
And welcome to Dr. David Krause's last AIM CFA presentation. Now, not really, but officially in his director capacity. So, David won't want to hear it. This is why he has turned back. But thank you for the program. Thank you for the 2,000 plus pitches you've worked on over time. And so I expect the A game out of you 4, and I expect the A game out of the questions and answers. Good luck to you. Starting us off, Owen, if you come on up with Concentrix Corporation, walk us through as you walk up here how you came on this company. Any key drivers, if there's a question out there that just keeps coming up or something you didn't feel like you had a chance to address before we cut you loose, that would be wonderful. I think we've got a couple ringers in the room. You're more than welcome to grill any of our students at any time. So take us away, Owen.
Well, thank you, Dr. Wall. Congratulations, Dr. Krause. My name is Owen Filbin, and I'm a junior in the AIM program covering domestic technology. Today, I'll be pitching Concentrix Corporation, ticker CNXC. So through my screening, I was looking through high growth companies like I usually do, and then strong management, strong earnings, and then strong ROIC. I came across Concentrix, and similar to the last company I pitched, they handle a lot. The revenue comes from value-added services, so I really like that. To go off 2 looming questions out there, my first is my beta. So considering they've only been around for public for about 6 quarters, the data on their beta was slim. So even running like a daily frequent beta, it was coming out to way too low for my liking. So I ran a peer average and then my comp average, and I came out to a beta of 1.1, which I thought was more appropriate for the company. And then the other is my revenue estimates for 2025. Management expects 10 billion by 2025, and I thought this was kind of aggressive, so I scaled it back a little bit with, I thought, more appropriate assumptions. So that's indeed to all when I mentioned scaling back revenue estimates. That's what I was alluding to. So other than that, I'd be happy to open it up to questions.
Great. I'll go first, Owen. By the way, you'll have to speak up. Our crypto miner is making money, but it's also making noise.
Yes.
Okay? That's what that is. We're mining back here. Of course, with my little bit of fintech tilt, I certainly like this.
Yeah.
Okay. Again, go through the basic technology they're using to deliver their service, and then who would be a couple of their major clients?
Yeah, so their clients are anywhere from consumer technology, financial services, just bread and butter companies. They house top banks, top fintech firms, and top IPOs for 2021. So essentially what they do is they streamline and optimize kind of all aspects of a business's customer experience operations. So whether that be purchasing, customer feedback, even as simple as like customer, like your order is here, that type of stuff. And to go off your point, the technology they're starting to use is AI and their own program chatbots. So like instead of having in-person conversations over the phone with people, it's artificial intelligence and like chatbots, and then voice of the customer, which is like data analytics through customer surveys. So it's like trying to proactively use AI to guess what the customer is going to like.
I'm going to include our guest here. At Marcus, are you using any AI, any chatbots when you get an inquiry?
Very early stages.
Okay.
Yeah, so we're just starting journey.
If you were going to outsource that services, this is an example of a company that provides those services. Okay, thank you, Owen.
Questions from the audience, what you're thinking. Tam, can you walk me through how you came up with the total addressable market? And in particular, did you give any thought to how current environmental factors, potential recessions, those things might impact it, pluses or minuses for the future?
So
thanks.
For TAM, I went on, it was investor relations, so management. Specifically, the breakdown, how I got 550 billion. So 270 billion is coming from their digital IT market, and then 190 billion is coming from their adjacent market, and then another 90 billion from their PK.
So these expected CAGRs, did you do anything to them, or you just trusted management for everything?
I trusted management.
I'd like to see, do you have any thoughts on how we might deviate from these measures?
Yeah, I guess to your point, I guess to your point, I would scale back probably 1 or 2% because they're probably using their 2025 estimates, which I addressed that I think it's
Yeah.
a little aggressive. So I guess for every CAGR I used in that regard, I'd take 1.5%.
And that's built into your DCF
Yeah, I
already?
scaled it back.
Awesome, thank you.
Bill has a question behind you.
Bill?
I mean, they're talking about 15% of the 10 billion being in acquired revenues. What would be their organic growth rate through that period of time?
They are using 9% currency adjusted, and I'm using, or no, 12. Sorry, they're using 12% currency adjusted, and I was using 10% because, like I mentioned in my risks, with all the countries they operate in, I'd scaled like 2% back.
Mr. Dua?
Hi, Owen, nice job. I want to learn a little bit about your debt. It seems that they're about 40% debt to equity. Could you talk about the denomination of that debt, if it's floating rate or fixed rate, and how much that is in dollars?
So
Hey, Owen, can you repeat the question? Because it is
Yeah.
hard to hear back.
he's interested in my debt. I can get back on the structure of the debt, but I use fiscal 21 numbers for my debt and WAC, and they recently added on debt. And again, I can get back to you on that structure. So if they have 800 million in debt, and that's what I use for my WAC, but I can get back to you on the additional debt they added on.
Do you know if it's fixed or floating?
I do not know, but I can follow.
Grace?
Hi, Owen. Could you just kind of tell me a little bit about how they're actually going to like take over more of the market? Like, are they going to keep acquiring other companies?
Yeah.
Or do they have like a product?
So they recently acquired ProKarma, which added 5,000 consultants and engineers into their IT team and IP assets. So they're definitely including M&A, which contributes to by 2025 they're expecting 1 billion in M&A and inorganic activity. And then also my third driver, I mentioned kind of like the metaverse, and I have yet to see another company quantify what their revenue expectations are for the metaverse. So they're starting to catch on to these like super cycle new gen trends. So that's kind of how I foresee it.
Have they named like a target for 2025?
Yeah, they want to reach operating margin of 14.5.
Or I mean, a target company. For,
To acquire.
yes.
No, they haven't.
Okay.
They just foresee more inorganic growth.
Gotcha. Thank you.
Let's roll into valuation here.
Yeah.
Again, talk about your major assumptions that went into your DCF.
So I used a WAC of 7.97, a terminal rate of 1.5, and then I added 50 basis points of premium to account for the country risk. A question that was asked was why not 1.75? When I boil it down, it only added about $5 more of upside to my overall relative valuation. And also, since I scale back their estimates, I thought it was more appropriate. And then into my peers, I weighted Excel Service Holdings and WNS Holdings 12.5% instead of 25% because of the PE or of the EBITDA and price to sales multiples I was using. Those were like consistent outliers, and I believe that like if someone's going to fudge the numbers for upside, that's kind of where it takes place. So I kind of wanted to have an even playing field for that. So that's why that explains my weighting.
Can you talk about Dennis Polk, if you know anything about this, the CEO of CNXC, right, the parent of this company, I guess selling off 10,000 shares. What about that? No problem. Follow up on that too, Joe.
Kind of a two-part for your acquisition with ProKarma. You said that you use management there. Do you do any of your own estimates on what the acquisition would bring in for sales? And then, or were you able to look at any past history on that? And
Yeah,
then do you know what the current consultants do for revenue?
Yeah. So in terms of sales, 530 million in sales, and then 85 in adjusted EBITDA. I tried to dig into like actual tangible things, but a lot of them are software engineers and just general IT consultants. And also, this is like their shift into like the digital world, so more of that like interface and like actual customer engagement, which expands to the market in that territory.
Grace, or Rishi, sorry, you already went.
Yeah. Can you explain what happened at the stock price? It seems like they beat on revenue and earnings. So what kind of happened to it? Why did it tank?
I explained this in detail. So in September 21, they announced a share repurchase program. So despite beating earnings and revenue estimates, they didn't pull through on all their obligations to buy back those shares. So that's my take on their volatility recently.
And thank God they didn't, because I'm assuming the share prices got hit now.
It's,
All
yeah,
right. Grace, then David.
Could you tell me a little bit about your first risk with the 5 largest clients making up
Yeah.
25% of revenue? Like, are there contracts with these clients or?
so another question I get asked was who makes up these contracts, and they don't disclose that, but what they do disclose is that these contracts have year over year been adding on more benefits, so like it doesn't seem like these contracts are, I guess, a huge risk. The other thing I will say is they get 90 days notice if the company's going to terminate a contract, and they're held for like usually like 3 to 5 years. So in my opinion, if any of these clients were to terminate their contracts, it'd be well in advance, and they can adjust to it.
That,
You and I didn't talk about this. Do they have patents, intellectual property? How much did that come into your thought process regarding valuation in some of your longer term forecasts?
Yeah, they have patents on their VOC, which is their voice of the customer, and then their chatbots are in process of receiving a patent, and then ProKarma has a host of patents and trademarks. They just didn't really disclose what that is.
Okay. Did you get a chance to actually interact with one of those? Did you try to use
No, I
the
haven't.
chat box for one
I
of the
think we need to
clients?
pay before that, but one day maybe.
All right. I think we're good. I appreciate your
All
time.
right. Owen,
Thanks,
thank
Owen.
you.
Yeah. So next up will be Anwar, and you're going to talk us through MarketAxess Holdings. And same thing, you know the routine by now. You can tell us how you found the company. It's maybe something unique, very short. If there's a question people keep asking that don't seem to follow, or you have something you want to address before we get going, and then we'll hit Q&A.
Yeah, my name is Anwar Ahmed, and I'm a junior in MarketAxess program. And today I'll be presenting MarketAxess, which is an electronic bond trading firm. So my screening process, I really explored a lot of different avenues within the financial services. Just wanted to find a company that would make sense in this type of macro environment, but also in a growing industry. I looked at a lot of different type of companies, and then MarketAxess was actually came up in a conversation between me and Professor Walker. And I learned, and when I looked into it, I found some very interesting facts about the fixed income markets that I thought were very interesting in terms of being inefficient and could get disrupted with new technology. Over 70% of all fixed income trades were actually done the traditional method of phone conversations and instant messaging and emails. And there was not a lot of electrification in this. So that was a huge inefficiency in the market. So MarketAxess has been trying to create a platform that creates an electronic way to trade bonds and other fixed income securities. And it's saved over $1 billion+ since 2020 in transaction costs. It operates in a really large market that's growing pretty fast. They're expanding into more emerging markets and in China. Overall, really profitable company as well, operating margins around 47%. Trying to tie in what Dr. Kraus taught us in class, it has a lower beta, so seems like it's a good stock to own in this market climate. One thing I'll address right before I start is about my peers. People were asking me on D2L why I weighted TradeWeb at 55%. That's about the closest peer to MarketAxess. There aren't a lot of electronic bond trading firms out there that serve the same clientele and have a similar business model. So establishing a peer group was a little bit challenging, but I would say that's the closest peer, and they give a better insight into how we should expect MarketAxess to be valued by the market. So that's kind of my rationale behind that. So I guess I'll open it up to questions.
I just had lunch with Amy Hahn, a 2007 graduate of the Inc. program. And Amy works for Northwestern Mutual in their bond portfolio area. Do you know who the clients are? Are these institutional clients that are using MarketAxess for trades?
Yeah, so there's about 1,800 clients on the flagship platform, and all of them are institutional. About like 92% of the trades on the platform are institution to institution. About 8% are like dealer to dealer trades. So yeah, this is definitely a platform that is tailored to meet the needs of institutional clients.
The business model is they get paid some fee, some part of the transaction fee.
Right,
For the-
so, yeah, the fee structure is, it varies quite a bit depending on security type, transaction size, availability of buyers and sellers in the market, a lot of different, and they have different plans as well, so they have like a minimum, they might charge a client for a minimum trading service fee, so there's a
One
lot.
last question. Why stocks were easy to be digitized is a share of Apple is a share of Apple is a share of Apple.
Yeah.
Okay, whereas a bond, if you take Walmart, they might have 75 different bond issues outstanding.
Right.
Even some of those can have different tranches.
Yeah,
That's been a challenge, how they address the unique nature of the bond market.
absolutely, and that's why electronic bond trading makes so much more sense to digitize. Is just because every bond issuance is a completely new security. So in equities where one share of Apple is just a share of Apple and it's pretty easy to create a platform or it's easy to seek liquidity, there's a quite a problem when it comes to fixed income when you want liquidity in your position. Every security is different. Finding a buyer may be difficult, especially with traditional trading methods. So MarketAxess is really trying to become a liquidity center for these like multiple different asset classes that or security types that you'll find in fixed income.
Okay, thank you.
Okay, Rishi.
Yeah, I have a two-parter. So can you kind of walk me how you modeled out revenues? It kind of states that your commissions could vary based off of bond yields and years maturity kind of change. And the second part, it seems like you have low conviction in your peer evaluations, but why didn't you consider a DDM since you have a payout ratio of 39%?
So the first part of your question was what assumptions went into my revenue?
Yep.
Yeah. So modeling out revenue was quite challenging for this firm just because there's a lot of different factors at play and transaction, like revenue per transaction varies a lot as well. So I made some basic assumptions on how revenue was in prior years with the volumes that we saw in the fixed income markets. So the company's coming off of probably the highest volume years, which was 2020, and they kind of sustained that revenue in 2021 through the growth of their post-trade analytics services. So to forecast it going forward, I had the post-trade growing like steadily with what management was saying for guidance, and when it came to just trading volume, I had it adjust for like what some of the firms were saying about where trading volume is going to go for the next year, and then kind of my own assumptions on how I think volume is going to change and how their market penetration is going to be. So that's kind of the factors I consider.
Do you think commissions are going to go up or down on these trades though?
I'm sorry, what?
Commissions on those trades, are they going to go up or down? Do you
So in this year, I think commissions are probably going to be similar to what they were in 2020, just because the spreads for bond like bid and ask seems to be like closer to what it was then, but volume isn't at that level yet. So I think they'll earn a higher spread or higher commissions per trade, but probably process less volume.
And the DDM?
DDM I didn't do just because I didn't see that as a good metric for just valuing this firm. Like they pay quite a small dividend. I think the assumptions that go into the DDM wouldn't fully capture, wouldn't be a good example of how you could value the free cash flow of this company.
Okay.
Professor Walker.
Most bonds trade over the counter, which means they're principal trade versus agency. Now, looking from a bond manager perspective, do you get better performance if you trade agency over the counter?
I don't think I understood your question.
Well, I was just wondering if you get a better, if you use MarketAxess as a bond manager, do you get better performance out of your portfolio of trading with you rather than having to hit a spread?
Yeah, so actually this does deliver a lot of cost savings to the managers to trade the bond electronically than the
Is there anybody done a study on whether or not bond managers who use agency traders over the counter better performance advice?
I didn't find any research that would suggest that a certain type of way to transact a bond could lead to higher like returns for them. So I didn't really see that. So I could look into it more and see if there's a that'd be an interesting to look at. So I didn't read anything related to that.
Basil.
Yeah, could you please talk about like the recent selling downgrades from Credit Suisse as well as Zacks Investment Research, and talk about why they also lowered down their ratings, which is significantly lower than your price target?
Yeah, so there was so many adjustments to their growth when it comes to price targets from analysts. When I read a lot of sell side reports prior to 2022, this company had an $18 billion valuation. The growth rates that analysts were adding to this were like 17%. Morgan Stanley had like a $610 price target. So a lot of the downgrades you're seeing is just them kind of adjusting to the stock drop that you kind of saw within this year.
Andrew.
Hi, nice job. I want to go back to the topic that Rishi was kind of talking about with your pricing and revenue. I like that you gave us some good data on their market share. I want to learn about your modeling process with that. How did you model out this market share? Did you have it changing as the bond market changes in the next couple of years?
Yeah.
Can
So
you repeat the question for us?
yeah. So just addition to Rishi's question about modeling out revenues relative to bond volumes in the future. So of course, like it's very hard to predict a lot of like volume for bonds going forward, but management did give a lot of guidance on where they think the market is going. And in the short term, you can it's easier to see where the bond volumes are going to go, especially with the rising rate environment. That's like higher management said that would trigger higher volumes. So that's so in the short term, that's how I modeled out my revenue with that data in mind. When it comes longer term for my 2024, 2025 estimates, I had to make a more of a general claim but I stayed a lot more conservative just to make sure that this company would still have upside in a situation where bond trading volumes were lower than what was predicted.
More conservative than street estimates, or more conservative?
More conservative than the street has pretty high growth rates for revenue.
Okay. Did you take a look at all with this market share actually shrinking in the terminal years? A potential situation?
So interesting thing that about this company is that so bond volume has been growing pretty consistently, just with the overall debt market growing, and MarketAxess is also expanding into like international bonds. So their TAM is growing. So even if volume like shrinks within the domestic markets, I think they'll have more market penetration in their international markets to kind of make up for that for the terminal years. And I used a pretty conservative terminal growth rate of 1.25% for that.
All right. Yeah, nice job, Anwar. I kind of have two questions. The first one is about just kind of your ESG and where what's behind that rating and what it looks like in terms of their peers in the industry. And second one is about your second driver with the approval of their fixed income trading, and just kind of trying to figure out where that $5 billion is coming from for the total addressable average daily volume.
Yeah, so the first question is related to ESG. ESG is actually a big part of MarketAxess's strategy. Even if you go on their website, ESG is one of the first things they mention. They actually have a bond trading platform specifically tailored for green bonds, which are bonds that are issued for funding the infrastructure of green, of like renewable energy and other green projects. So they actually have a platform dedicated to that. So that's kind of helping their ESG rating. And also recently they launched a partnership with minority-owned firms to try to get them on the platform, because one interesting aspect about the fixed income trading is that a smaller firm may not be able to seek liquidity from larger firms because they might not have the contacts. So they might not be able to call a BlackRock or one of these larger firms to get liquidity. But on the MarketAxess platform, everyone can trade with anyone on the platform. So their goal is to bring a lot of these smaller minority-owned firms onto the platform. So that's been helping their ESG rating as well. And the second part of your question was?
In terms of your second driver, you talked about the $5 billion in total addressable average daily volume. Just kind of where that number's coming from.
Yeah,
Is that-
so that's based off of of what management said, how large the Chinese bond market is in terms of how much is traded every day. So it is adding quite a bit of total addressable average trading volume from expansion into China.
All right, so we're gonna go with Joe while we wait on Dr. Krause. Go ahead.
Hey, Anwar, so I know we've been talking a lot about the revenues and the trading volume and fiduciaries. Do you run any sensitivity on that? And how that would have affected, if it was not to be like a bull bear vanilla market?
I didn't do a bull bear and base case for this one only because their revenues are more based on they're not really earning spreads and the credit markets are a little more predictable. Like they don't necessarily, even if the market goes up or down, that's not really what affects them. It's mostly just volume. So I didn't run that, but I did run a sensitivity. I did change my assumptions to see like what it would be like in an environment with a lot lower growth rates as well. And I still got upside. I still got about 14% upside from that, relative to 39, which I have for my current case. And I think this one is more comprehensive of what we're probably gonna end up seeing.
Go ahead.
Just kind of touching on your rel-val. So in your valuation section, you mentioned that you get an weighted average peer multiple of 57.19. Then if I scroll down to your peer valuation table, you have MarketAxess having 60.8. But in your valuation, you have upside in your actual valuation section. Can you just kind of explain that? Maybe I'm just missing something.
They're weighted. I'm sorry. What did you? Can you
So
explain
in
that
your
again?
actual valuation section, you get a multiple of 57.19, which leads to $387, which is upside. Then if you scroll down to your actual table, your price to earnings is 60.8.
Yeah, but I have TradeWeb at 55%. So it so the averages that I calculated there, I don't I guess I could have made an error in the table, but I used the average, so it should still be correct. Yeah, I think my tables might have had an
So you'll
average.
follow up with the actual average you used, the
Yeah.
number with the class.
Okay.
All right, last question.
I'm just kind of going off of Chris's question. Did you, what other kind of rel-val metrics did you look at? So if
Yeah.
we did take PE out.
So again, because it was really hard to establish a peer group for this company, I didn't do a lot of rel-val evaluations just because I don't think it would represent realistically what this company would be traded in the markets. So that's why I used the historical trading data, because I think we could see how this firm was traded in various market conditions and try to get a good sense of it from that. This industry is kind of still not very mature in the sense that not a lot of competition still. Their number one competition is actually just the traditional way that bonds are traded. There aren't a lot of companies that have a similar platform, so that made it really difficult to.
All right, you have an answer to the question in the audience.
So he
We'll go
used
into overtime.
he used a 5-year average PE instead of his last 5 months. His last 12 months is actually 22.2 for MarketAxess. That's
Oh, I'm sorry. Okay.
yep.
Yeah,
That's what it
what
is.
he said.
Okay.
All
Yeah.
right, thank you. All right, let's take us away with the applause. And we can bring Nasser up. Nasser, I gotta look for what you're pitching me on. This is gonna be fun. I wanna see this metric that you were trying to describe to me. What's that?
Oh yeah.
All right. Dr. Krause's last place. There's no business today. All right, so, you already got a question? You're first. All right. No, please lead us away. How'd you show up with the company? What'd you do? We already got a question ready in the audience like this.
Grace, you got dibs
It's
on the
not,
first
it's
one?
not.
She
hard
does.
question.
Grace has got
It's not
dibs on
hard
question
question.
1. I got 2 right there. It's like an auction. One,
Oh,
2. Do I have
three.
3? Anyone want the third slot? They're lining up. All right, third.
Four.
Four.
Can I get a 5? Can I get a 5? I'll take 5.
So you're at 4.
I'm at 5. He's 4. I'm 5.
You're gonna speak up, because
Yeah,
this is noisy.
We'll also need
the audience to speak up because I realize I can't hear either.
All right.
Well, my name is Nasser Hyat-Khan. I'm a junior in the AIM program at Marquette, and today I'm pitching to you FUTU Holdings. They are a one-stop shop financial technology platform for investments that is a digitized brokerage and offer wealth management services. They focus their marketing towards millennials and Generation Z that are relatively affluent. They're headquartered in China or Hong Kong technically, and they've begun expansion into Singapore and Australia, and hopefully we'll move westward soon.
Any questions lingering out there that you want to come up? Anything else, or just open the floor?
I'll open the floor.
All right, Grace, take us away. I don't remember.
Okay.
Hi, good job. I'm just curious on your first driver, the kind of last sentence you talked about, if the company continues acquiring 1 million clients year over year, it would like reach 17 billion in 2026. Did you do any sort of like sensitivity analysis of if they don't acquire that many? Or like how did they get, like does management expect that to continue? How did you kind of get to that number?
Well, so with the so I took the numbers from Singapore, and they moved into Singapore in fiscal year 21. They acquired 100,000 clients, and then this quarter I think they made it up to 250,000, and so I kind of took those numbers and said, okay, well, why don't we find the median age group that they're targeting and put that towards Australia, and then move that to the total age group that there is in Singapore, if that makes sense. And then
and you just see that continuing every single year. So
yeah, the way I see it is that FUTU Gold, which was their initial platform for Hong Kong, they gained 10 million users in 3 years. So I don't see why 11 million in 5 is not feasible.
All right, who's two? Rishi, I forget.
Was 3.
Two there. Thanks. Yep, sir.
So I just have a question on your operating income. Can you like break it down? Like how is operating income growing quicker, or how is it larger than revenue? Like can you break that down?
What do you mean as a larger than revenue?
How is operating income larger than your revenue? For every year.
So like,
Oh, I see.
Yeah.
Because I just don't know, how does that work?
There might have been a technical error in my write-up that I'll need to go back and fix and get back to you with.
do you know if the DCF model had correct numbers or not off the top of your head? If you don't, you need to look. That's okay.
I believe it did, but I'll go back and take
so
a
he's
look.
going to have to report back because that's kind of a big catch. All right, 3.
You can go ahead.
Yeah, I'm number 3 now. Can you please talk about like Zach's investment research, especially like going on to the perspective that their negatives are just, like, especially with the recent performance, are priced in due to regulatory risks?
So can I ask you when that article came out?
Yeah.
So I know the ADR delisting was a big deal and the SEC was cracking down, but I believe since then that time has passed and it's not really an issue anymore.
Yeah, it came out. So it came out about a month ago.
A month ago?
Yeah.
What is your question exactly?
Yeah. So could you do you believe that with regulatory risks, do you think they're priced in?
No, I think there's a lot of upside to go from for here. That's a moment that'll pass and they'll make it through.
Thank you, sir.
Number 4.
Awesome. Yeah. So can you just walk through why Coinbase is such a great peer? I know that FUTU doesn't really have cryptos, and you kind of mentioned that they have slowing growth. Why are you so sure that this won't happen to FUTU in the long term?
Well, frankly, I believe that it will, like FUTU will slow down, but I think they're a newer company, and so it's going to take time for them to catch up to somebody like a Coinbase or even Charles Schwab, right? Where their user count is sort of maxed out like Netflix or any of these subscription services.
Do you know what their cost to acquire customer is, or like any marketing spend?
According to the CEO, apparently most of it's word of mouth.
Really?
Yeah. I was in a management report. I was shocked too.
Is that their strategy to go into Australia and like these unknown markets as well?
I think they have initial setups that they'll require, but I think most of it will be through word of mouth.
Okay. As a final one, just what are peers kind of
questions,
spending on R&D?
What's that?
What are peers spending on R&D?
From my understanding, it's much less. I don't have those exact numbers.
Okay.
Grace wants to jump in.
Awesome.
Very doable.
All right. Mr. Dua has conceded the floor. That's great.
Thanks, Noah. So like if they are going off of word of mouth and right now they have less than 1% of revenue in Singapore, then how are they planning on?
Well, they literally just got their licensing and opened up the brokerage services to Singapore like a couple of months ago.
So
You
will
have to
they like be
understand.
doing anything additional to kind of get that started?
I'm sure that will, but it's not gonna cost billions of dollars. You know
Yeah.
what I mean?
Yes.
All right. Number one.
I'd ask you a great job. I want to learn a little bit about this company's balance sheet. How would you rate it out of like relative strength compared to peers? Something that I have in mind right
I
now
lost
is
track.
what happened to Robinhood, which was cryptocurrencies, and now the short trades. You see that as a
So just to clarify, because I am deaf, Grace is left. No, I'm just kidding. You want to understand, you want to see if I have faith in the balance sheet and because of Robinhood's issues?
Yes.
I do think so. I do have faith in the balance sheet, and I say that because they've delayed their production of crypto into their platform instead of just rolling it out. And I think that they're learning from Robinhood's mistakes in order to become a better platform overall. Good.
Nasser, as I just kind of look through FactSet and look at some of the estimates, you have revenue by 2022 being 1.85 billion, I would assume. And if you look at FactSet, they don't even have, they get to 1.3 billion by 2024. So I guess, kind of what do you see in the company that most other analysts don't? And why do you get such a big growth rate compared to kind of the estimates in the street?
Chris, I think that was 3 questions.
Stacking them
I'm just
up.
giving you a hard time, bro. So you want to understand why my estimates are higher, right? And then the second one being,
Why don't you handle them in pieces?
Just kind of
yeah,
explain
let's do like ABC. And
Just
then I
kind of
can
explain those and why you think you're,
Why don't you take
why you have your revenue.
Just say what you're addressing.
Well, I think the overall growth in the company within the last couple of fiscal years in terms of acquired clients has been a massive driver for why I expect that to continue. There's no, like I said to Grace, there's no reason that they can't acquire 11 million clients in a longer period of time as opposed to 10 million in that shorter period of time that I just mentioned. And also reading through sell-side reports, they had their price targets much higher than mine, and they had relatively the same estimates. So, FactSet is one thing, and you know how it is. Does that answer your question okay? Awesome. Thank you.
Nasser, good job. I'm kind of piggybacking off that one a
I'm
little
so
bit.
sorry, Charlie. Can you speak up?
Yeah, I'm kind of going off that question a little bit, but more into the midterm revenue growth rate assumptions. So like in 2024, you have it at 80%. So what's causing the increase in revenue growth from to about 90% in the out years?
Well, I'm expecting them to fully move into Australia within the next couple of years. They just got their licensing, allowing them to be a brokerage service in Australia. And I think once the selling and marketing processes go through, that'll go okay. And then I expect Singapore to grow to 1 million clients by the end of the year. So that's kind of what's driving that continued growth.
So I've got 2 questions for you.
Shoot.
One, this thing, the ADR structure, do you know if it's a VIE, how it's set up?
What?
Variable interest entity? A lot of the
I'm not
Chinese
sure.
companies, including Alibaba, are set up that way.
Yes, I believe it is.
So the bad news for you is a lot of those companies might get delisted this year if they don't meet requirements. And so one of the concerns I have of any ADR we have in China, if it's a VIE structure, I need to look deep in to see if they're at that risk, right? They trade at monstrous discounts for good reason. There's a chance the company just won't exist by the end of the year. So I'd encourage you to double check if it's a VIE, then we need to take that risk profile into account in our portfolio. Not to say it's not a good stock, it's just there is a serious risk of delist. 2, in the same line, do you know if they report in Chinese accounting standards?
Hong Kong.
Yeah,
Or
Hong
no.
Kong is a part of China now.
GAAP, sorry.
Chinese GAAP or US GAAP?
US GAAP.
All right, so we need to double check that. If they have an underlying in Chinese GAAP, they've had some rule changes. So the VIE thing is near and dear to my heart. I need to have a follow-up with you because it actually affects our portfolio in a way I didn't think about.
You know the auditor?
No, I don't.
Yeah.
Yeah,
Yeah, go ahead.
questions in the discrepancy in your market cap. So you have interactive brokers listed at about 7 billion, but it's listed at like almost 23 billion.
Really?
Charles Schwab is also like a $130 billion market cap. So like, I guess where are you getting those numbers from?
Well, I guess the equal sign in Excel didn't cooperate with the correct rows and columns that I wanted it to. I know Charles Schwab, oh, you know what? Charles Schwab, I believe, is at 124 million.
Yeah.
So I guess it's a comma error, if you will.
Okay.
What are their fees like compared to like Robinhood?
So what are their fees compared to Robinhood?
So for Hong Kong and Singapore, I know that their fees are, I believe it's 0.03% per trade. And of course, that varies in size with a minimum of 3 cents per trade. And then in the US, it's $0, so they're not making any revenues in the US right now. And then Australia, we'll find out in a year.
Any last questions? All right, you made it through the.
All right.
Stop.
I'm Sean.
Yeah.
Thank you, Doug.
Yo, what?
All right, and last but not least, we've got Matt talking about ACM research. I think you know the routine by now. I think you talk us through how you came on it. Anything unique that people keep asking or that you just want to bring their attention and drill it away for the last one. Thanks, sir.
My name is Matt O'Brien. I'm a junior in the Applied Investment Management program. Today I will be pitching ACM Research. It is a semiconductor wafer cleaning company. I was looking for growing industries with companies that have strong growth and solid balance sheets. One of the questions that I got a lot of was why operating income decreased relative to 2021. The only reason for that is really I provided a very conservative revenue estimate along with a very conservative gross margin and operating expenses. So relative to revenue, research and development, sales and marketing were said to be a lot more relative to revenue compared to previous years. With that, I'll open up to any questions.
All right, Andrew, Joe.
Hi, Matt. Nice
Good
job.
day.
I want to learn a little bit about your model. Did you look at using different WACC rates throughout the timeline of your DCF, just with interest rates and the risk-free rate changing a lot right now and potential more hikes coming from the Fed? Did you look at using a variable WACC rate at all?
I did not variate my WACC rate. I used 9.16% throughout the next 10 years.
Joe.
Do you know what your historical operating margin was, or like any gross profit margins were historically?
So management estimates that gross margin will be between 40 and 45% each year. Operating expenses are about 30 to 33% of revenue. So operating margin has historically been around 12 to 17%. In the current years, they're increasing their expenses with increased development.
Follow up, or you good?
Good.
All right, David.
A lot of China exposure, huh?
Yeah,
Understand?
yeah, a lot of time.
Yeah, it's real important to capture that risk factor in your discount rate as well as in the uncertainty of the revenues and cash flows. I know there were a lot of questions about that appeared online, but for everyone's benefit, talk about that again, okay?
So management, along with street estimates, provided a revenue outlook of about 380 to 400 million for 2022. For my weighted average cost of capital, I didn't put a specific country to risk premium. However, I gave very conservative estimates throughout the 10-year timeline with customers that may discontinue business or lack of development of products and whatnot. I didn't do anything specifically to the weighted average cost of capital for China.
I mean, you got a bunch of upside here to work. So what you might do, if you get a chance, see what happens if your WACC is higher or you add some sort of risk premium into the cash flows, okay?
Yeah, definitely.
Go ahead, take this away.
Saying that, I see that two of your customers account for 48% of the
Speak up if you could.
two customers account for 49% of the revenue. Just kind of what are the details with those customers? Are they locked into contracts, or how long do these contracts last? If there are any?
So the two customers of ACM are two companies that operate in China, the Huawei Group and Yangtze Memory Technologies. These two customers have been in business with ACM since 2016, and they have continued businesses as they expand their operations through 2022. They have no specific contracts locked in for any timeline. However, management still sees these companies using their products as they've found benefit. So that's not too much of a concern going forward.
Basil.
Hey, Matt. So could you please talk about how ACM is going to prepare for the expanding market of electric vehicles, especially with the Asian markets or Asia in general just trying to take over the EV market? Like, could you just talk about like their strategic operations going into that?
How they're going to target the EV market?
Yeah.
So I guess what ACM Research does is they clean wafers, which are specific components that go into advanced circuit chips.
Right.
So whatever customer base that they have, if they want to join the EV space, ACM Research will be on the back end of that. I guess cleaning the chips required for those EV components. So it depends on if their customers decide to get to the EV space.
Okay, cool.
Question back here, Professor Walker, and then I got one over here. Yep.
I was busy just doing something, so I wasn't paying enough attention as I should have. China's impact right now. China's impact right now.
Okay, no.
Yeah, what is, I mean, they shut down Shanghai, other places are still closed.
So ACM Research has seen a pretty significant impact given COVID restrictions in the first quarter. Many of their deliveries that were planned in the first quarter of this year have been pushed to late 2022, 2023. Operations, halted in Shanghai. However, they were added to a whitelist that allows them to go back into business. So for the first quarter and as lockdowns persist, their production may not slow as much as the sales deliveries. So their deliveries are more of a concern than their production for the China lockdowns.
Yep.
Where does all the production take place? Is it all in China, or do they have factories in the US, or kind of where is it all?
So pretty much all production is in Shanghai and Taiwan. That's where all their
It's like it's a turn.
Again, I'm not trying to undermine your effort here, but because of the COVID lockdowns that are in Beijing and Shanghai and Shenzhen, the harbors in Shanghai look worse than they did in Long Beach and Oakland about 4 months ago. Very few things are moving out of those ports right now. Did you read about any delay potentially associated with revenues for your firm?
So yeah, that was another thing. All that was really mentioned is the fact that they had scheduled a set of deliveries for the first quarter of 2022, which aren't able to be delivered until second or third quarter, whenever lockdowns slow down. They mentioned for their supply chain, usually it takes components about 2 to 3 months to get to them, whereas now it takes about 4 to 6 months. So there's a slight extension in their sales cycle for production. However, not being able to deliver products is not allowing them to recognize revenue until those get delivered.
So I'm going to ask a couple of similar type questions. Where is management? Are they in China also? Where do the people?
So management also works in Shanghai.
So management's in China, the people they pay. The production's in China. The customers are in China. I've got two questions. I'm not trying to be light. Why is this a domestic technology company? That's my first question. Help me understand that.
They're headquartered in Fremont, California, so that was my basis for giving them a domestic title.
But that's only in name only. There's not actual, like, all inflows and outflows of cash occur in China. Is that true or not? I'm trying to understand.
So basically there's a very small amount that goes to customers outside of the US or outside of China. Right now they're focusing on operations in China, however, seek to expand.
I saw the 1%.
Yeah.
So
They're looking to expand.
So then my follow-up is, do they have a tracking stock or similar stock issue in China, in one of the markets? And how do the change in Chinese regulations and reporting there that just occurred affect their reporting structure? Have you looked into that at all?
So I've not looked into their Shanghai stock issuance and how those regulations affect them.
Yeah, so we got a lot of things to consider, and the risk premium of China, the currencies, and the idea that current operations aren't actually domestic. Those are all things. It doesn't exclude things, but I want everyone to, take that into consideration as we talk through things. It's an interesting operation you've uncovered for sure. Yep. Who was next? There was a hand. Grace, sorry.
You kind of stole the setup for my question. I was going to ask the
That's
same
why I
thing.
jumped ahead.
But, but just like is there a reason why it's a U.S. company that's operating mostly in China? Like why there and not?
So China is where many of the semiconductor demand is. So being able to produce their equipment in China allows them to deliver easier to their customers.
Okay.
Anything else? All right. Thank you so much. We appreciate it.
200,000, 200 million pitches, okay. All right, nice job, everyone. We'll have 4 buy-sell recommendations go out tomorrow morning along with a ballot. Now, for those of you who haven't pitched in a while, next week, we're going to look at the positioning of the portfolio heading into the summer. So if there are some stocks in your sectors that you might want to overweight because you think they'll be attractive, or you think they should be removed from the portfolio, we want to do it. So there could be some sells, or there could be some upweighting or downweighting. You really want to position the portfolio so that it functions effectively for you over